All right, welcome back to The Explainer. Today we're diving into an investment analysis that's been making some serious waves online. It's all about an AI stock called Rezolve AI, and we're going to unpack the bull case that has everyone talking. So it all really starts with this one number, a big one. The stock jumped over 17% in a single day. I mean, a move like that, it's guaranteed to get Wall Street's attention. So the big question is, what is going on here? What's causing this explosion? Well, according to the analysis we're digging into, this wasn't just some random one-off spike. Nope. The argument is that we're seeing a bunch of different, really powerful factors all coming together at the same time, basically creating a perfect storm for the stock. All right, so let's get into the nitty-gritty. Before we talk about all the wild, explosive stuff, the analysis builds its case on a pretty traditional foundation. The core idea? It's that the stock is just plain undervalued. Simple as that. And the source material is really, really clear about this. This isn't being pitched as some kind of wild, speculative gamble. The entire investment thesis kicks off from this one point, that the company's actual fundamental value is way higher than where the stock is trading today. And you know what? It looks like the professional analysts out there tend to agree. You can see the consensus price target is right around $10, but some have it going as high as 15. What does that mean? It suggests the stock has room to more than double from where it is now, and that's even on the low end of the estimates. So, where's all this optimism coming from? Well, that's the interesting part. It's being fueled by the company's own guidance. And it was a total blowout. They came out and said they expect to earn at least $350 million. To put that in perspective, that's more than double what analysts were predicting. Okay, so we have the fundamental value case. Now, let's add the next layer to this thing, because this is where the story gets a lot more dramatic. We're now talking about the potential for a massive short squeeze. And this chart, wow, it really paints a picture, doesn't it? Just look at this. In only a few months, the percentage of shares being bet against the company, that's what we call short interest, has just skyrocketed. It went from 5% all the way up to over 32%. I mean, that is a massive, massive leap. And just to put that percentage into a real number for you, that translates to a whopping 39 million shares. That's 39 million shares sold short by investors who are all betting the price is going to go down.
So what this does is it basically creates a powder keg, right? Think about it. If the stock price starts to climb, all those people who shorted it, all 39 million shares worth, they become forced buyers. They might have to scramble to buy back shares just to cut their losses. And what does that do? It pushes the price even higher, and potentially even faster.
Okay, so there's another piece to this puzzle that the analysis points to. This isn't just a story about short sellers. There are signs that the big players, the large institutional investors, what people often call the smart money, are making some huge aggressive bets that this stock is actually about to go up.
And whenever you see that kind of activity, it immediately begs the question, and it's really the core question of this analysis. What do they know? What are these huge firms seeing that the rest of the market might be missing?
And you can really feel the astonishment in the original analysis when it describes this. The person breaking this down makes it clear that the sheer scale of these bullish bets is unlike almost anything they've ever seen.
And this right here, this shows you exactly why. The number of options contracts, which are basically just bets on where the stock price is headed, it just went nuclear. The volume exploded from a normal level of a few hundred contracts to over 70,000 traded in a single day. That's just an insane jump.
Now this can kick off a whole other chain reaction, something called a gamma squeeze. See, the firms that took the other side of all those bets, the market makers, they now have to hedge their risk. And how do they do that? By buying the actual stock themselves. We could be talking millions of shares here, which, you guessed it, just adds even more buying pressure, pouring more fuel on the fire.
And finally, the analysis brings in one last piece of the puzzle. And this one is a total wild card. We're talking about the huge and so far mostly untapped power of the individual retail investor.
The point made here is that if you look at popular investing sites and forums, Rezolve AI has like half the number of people watching it compared to a similar, even smaller stock. So what does that suggest? It suggests that despite all this drama with short sellers and big institutions, the stock is still flying pretty low under the radar of the average retail investor. So let's just pull this all together, because this convergence is the whole point. You've got a stock that's arguably undervalued with absolutely blowout guidance from the company. Then you layer on top of that this crazy high short interest and these unbelievable bets from institutions. And the kicker? All of this is happening before the retail crowd has really even noticed. For now, anyway.
And that really brings us to the final, lingering thought from this whole analysis. What you have here is a scenario where all these different, incredibly powerful forces seem to be pushing in the exact same direction. So it leaves you with this one big, provocative question. With the stage set just like this, what happens if that final catalyst, the retail crowd, finally arrives?